Welcome to the Texas Oil and Gas Podcast, the show dedicated to bring you the news from the oil patch deep in the heart of Texas, with your host, Ryan Ray and Josh Shelton.
And we're back with the Texas Oil and Gas Podcast. We appreciate you tuning in to today's episode. This is episode 225. I'm your host, Josh Shelton, my friend and co-host, Ryan Ray. Ryan, gas prices are up. We got people complaining. We got stuff trending on Twitter. It's a good day to be in the oil business.
Yes, sir. 84.11 WTI this morning. 84.11 Brent. 84.46. It's interesting times, and your boy Joe Biden is speaking this morning as well. So I think he'll be speaking during the recording of this podcast. So I'm not exactly sure what he's going to say. But
nobody's going to know. They're all tuned in.
We couldn't make it a minute without you making a Brandon joke. We couldn't make it a full minute. Oh, so anyways, yeah, man, it's crazy. We got a guest, Reed Goodman, coming on here in just a few minutes. So a lot going on.
Well, let's jump into a couple of stories before Reed makes it. No telling where this thing is going to go when he gets on here. So there's a CNBC article that came out today, actually yesterday. Oil rises on demand outlook despite China fuel reserves release. So we talked a little bit earlier this year about China's reserves, and we were curious how that was going to impact oil and gas prices. It looks like the demand outlook is pushing prices up in spite of that release from China. So it seems that oil is going to be safely hovering around this price to the end of the year. I think that would be, I'd take that bet for sure.
Yeah, and a quick shout out to Cody and Victor this morning out in the oil patch. The show is live on LinkedIn and YouTube. If you didn't know that, that being said, Josh, yeah. What are we going to see? We're going to have to see a curtailing of demand to slow down the prices, or to at least get them to level off. And I was on Twitter this morning, as you mentioned, and I saw some of the forecasts are going up to I think 120 in the next couple months. They're pushing them because there's just not a. It doesn't appear that there are any slowdowns to come. Now that could change, obviously, but that's just. Let's see here. Trying to see. This is Goldman Sachs. This is from Javier Blas 4 hours ago. He says, we estimate that oil demand is nearing 100 million barrels a day, its pre-COVID level, with winter seasonality and the recovering in international jet demand set to bring demand to record highs by early next year. Now, I'm old enough to remember, Josh, last year when they told us that we would never see pre-COVID demand levels.
Mm-hmm.
I'm old enough to remember that. Are you? You remember that?
Yep, I do. It was done. It was history. It's over. Yeah, and it looks pretty solid too, Ryan, because we have, part of the CNBC article mentions the November 4th meeting with OPEC Plus, and they are expecting to stick to their numbers as well. Now, that is one piece that could become volatile if they were to move or up their production more than expected. That's basically the only variable that I could see that could move this much. And I don't know how much they would be able to move it, honestly, at this point.
Well, yeah. Various countries have. I think the Saudis could obviously make a significant difference in there. If they wanted to increase production. But we're gonna get through winter, and then we're gonna hit Q1, and that's what we keep talking about. What's going to happen Q1 2022? Will we see the U.S. producers putting rigs out there? And I don't know. I've kind of heard, talking to people offline since our podcast last week, I kind of heard some mixed signals. Not from actual oil and gas companies, but for vendors. The vendors I talked to were not sitting there like, "Oh man, we expect to be blowing and going next year." We're a little bit concerned that the work's going to increase some, but not a lot. So I'm curious for our listeners. shoot us a note. Let us know what you're hearing because kind of getting mixed signals. So of course that's going to be driven by the producer and the midstream company. You know who they're working for. So it's not necessarily encompassing of the industry. But at $85 oil, you would be expecting to hear, we're about to blow the doors off this thing, and that's just not what I'm hearing from the service companies. That doesn't mean that's the way it is. It's just not the vibe I'm getting right now.
Brian, there is another article. This one's actually a few days old. This one is from the 25th of October. And the title of this one is Biden has few options to combat surging gas prices as voters grow concerned about inflation.
He's got one. He's got one. Come on this podcast. That's the best. That's the best thing he could do.
Yeah, I mean, you'd have gas back to $1.
Oh, we'd be giving it away. We'd be having to give it away. But in all seriousness, he does have an option, right? He can't force the companies per se, but he can roll back some regulatory stuff, and he could come out and just publicly take the side of oil and gas. And in a speech this weekend, I heard him talking about some stuff. It makes you wonder if he's going to have to roll back some of his rhetoric because he talked about the necessity for gasoline, and so it makes you wonder if we're going to hear more from the administration to kind of roll back some of that pressure because it doesn't necessarily result in investors wanting to come back to the oil and gas industry, but it would make, you would think, at least some people feel less burdensome or less concerned about the public sentiment. But then, if you're an investor, you got to think, okay, if I put money into oil and gas, the Biden administration's on my side for now, but will they be, come midterms or, in re-election? So that's got to be weighing in there. Speaking of really smart people who say a lot of smart things, I think we got a guy in the green room that knows that. Look at this guy. Look at this guy, Reed Goodman. Come on down.
Hey, how are y'all today?
Good, Reed.
Where are you at with that spiffy jacket on? You up in like Montana or somewhere?
Oh no, I'm just in the. Oh, I guess I got to go the right way on the camera. Yeah, I'm in Bernie today. We got a nice little cool front come through.
Bernie, there you go. Well, Reed, we were just talking about word on the street is that we've been hearing from various service companies that
Hold on one second. I got a 2-year-old with me. Let me send him inside real quick. What various service companies?
Yeah, service companies that are saying that they're not hearing a lot of optimistic news going to next year. What are you guys hearing?
That's the same for us. They're picking up a little bit for Q1, just kind of the normal Q1 spending, but we haven't seen anybody drastically increase their budget or anything like that. And so, not picking up a whole lot of rigs, not adding much to their frac fleet has kind of been the story that we've been getting. And so, in some regards, that's frustrating, right? Because we would expect oil being $85 a barrel that everybody be blowing and going, but it just hasn't been there yet. So, yeah.
So when do you think we cross over that threshold from folks aren't going to drill to they are going to drill? Like at some point we have to cross over, right? We can't keep seeing higher prices and rigs not going out there. And I'm talking about 1 or 2 rigs. I'm talking about significant increases in rigs.
Yeah, certainly. I don't know where that breakover point is, but there has to be a point, right, at which, a lot of it, I think is money. They don't have the money to drill, or they don't have the investment money coming in. They don't have the backing there. And, people want to work the ESG and say that they don't want to be in oil and gas. Well, at some point, I don't care how strong your ESG sentiment is, the money looks so good, you're going to start drilling again. And I don't know exactly where that point is. I think at $85 a barrel, we'd be kind of getting there. But, we've seen the rig count drop in the last couple of weeks, instead of consistent growth. And so kind of frustrating, especially on the service side. So.
Well, they're saying, Reed, that oil prices may be reaching as high as 120 a barrel by the end of the year. I mean, I think it would be a safe estimate of being around 100. Surely there's going to be companies that start to invest pretty big bucks in the industry if we get over 100 a barrel.
Yeah, you would certainly think so. On the production side, I'd love to see it at 100, 120. On the service side, I think I'd like to see that too. But there comes a point at which, you then, when you get that high, you then have a real conundrum on the service side because one, you can't find hands. Two, you can't find product. Three, all of your costs are going up, and so your margins are slim. And until we have that kind of price for 6, 8, 12 months, it's hard to even raise our prices, right? And so then we're working on a slim margin, and all of our costs are going up, and we're jumping through hoops to make everything happen. So it's kind of scary to think about $100 to $120 oil. I really like where we're at 85, and I think for us, if we could hold 85 for 6, 8 months, it would build a lot of sentiment where people are trusting in that number. But I think a lot of people are just they're just scared it's not going to hold out, and they don't want to get caught with their pants down again.
Yeah, you mentioned that sentiment. I think that's right. We're concerned because Josh and I were talking before you got on that I think Goldman Sachs, one of the big groups, is saying that we're almost back to pre-COVID demand levels, and we're expect to exceed that by Q1 of next year. Well, just last year they told us we'd never hit that again, right? And so that's how wrong they were on that. I didn't truly think $85 oil was going to happen this year. Not that I'm a analyst, but I didn't think we'd see that. So, but you can see that if you've worked in the industry and you're a hand or you're just an employee and you left last year, I talked to a guy the other day. He's really concerned about coming back because he doesn't know, am I gonna, give up everything and get the money, live that lifestyle, and then 3 months from now, 4 months from now, 6 months from now, I won't have the opportunity. I have to go back to where I'm from, work locally. Are you seeing that pretty common across the industry? People that left aren't wanting to come back, or are people excited, ready to go out there and go to work?
Yeah, I think it's the former of those two scenarios, that people had, they gotten burned so hard previously that we've always kind of, in my family personally, right? We've always kind of said, if I work for a year and I'm off a year, the money in the oil field can be so good that if you average the two of those out, it's like me working in some other industry, right? And so we just hope that we have more good years than bad years, but financially we plan that we're going to be off for some period. Okay. People have been off and hurting for so long that it's really hard to get back into it, and the instability, I think. And what we see is that people that do want to get in, their price point is so high that they're trying to make up for the last year and a half that they were out, and it becomes hard to hire those hands. So
yeah, and we never really recovered from 2016, right? And that's the other thing. We've kind of forgotten about that. We had 2016, then we had that downturn, and on this podcast we preached for years that we just want stable prices, and it felt like at the beginning of 2020 we were kind of getting there. Like, okay, prices been stabilized for a little while. Companies that are going to go away, they're going to go away. Companies get bought out. You're going to see all this transition, and then boom, COVID hit. So yeah, I think you kind of have these events that have kind of just stacked upon each other. And folks are going to be gun shy. Even investors, you can't blame them for being gun shy too, because if they invest a bunch of money in oil and gas, ESG aside, while we're all sitting here like, oh, the prices are going to be high, they're going to be high forever. Maybe not. Maybe next year you do see a correction again.
Yeah, it's interesting to me because listening to well, of all people to listen to, Ben Samuels the other day saying that he thought
that's a mistake. That's a big mistake. But go ahead.
Saying that he thought that capital was flush, and that money was cheaper than it's ever been, and that there's plenty of it out there, and that he was talking with you, Ryan, on the topic of starting a business that might be a good time because there's a lot of money out there, and I just don't see it. I just don't see the money out there. I don't see the investment flowing on our end like it could be, like it should be, right? So there's so much opportunity now, and there's been so much opportunity in the last 18 months to jump in, and really when you get into the oil and gas space, I just don't feel that it's flowing the way that is called for.
So what do you think about the ESG stuff? Last week I mentioned that there's a group that's kind of asked me to work with them on carbon credits for producers. And their thesis is, quite frankly, if you don't do it, you're just going to, wither away and blow away and die. Like if you don't get on it now, you're going to miss the boat. Do you think that smaller producers, especially, should figure out a way to get into the ESG business, carbon credits, whether that's some kind of um, repurposing of natural gas? What are your thoughts on that?
Yeah, so I personally am a huge fan of repurposing natural gas. We're working on a project mining Bitcoin off of a wellhead. And so I'm all about that. Now, I don't think that our smaller producers are going to die if they don't adapt there. I think they've always kind of had a niche place in which they pick up stuff that's uneconomic for the big boys. I think it's going to be huge for the big companies to have to, their pressure, and especially from the shareholders. Um, to adapt in that way. But I think as far as the small producers, the independents, in Texas in particular, I think there's still a lot of room for them to operate a lot of these older fields the way they are. Now, with that being said, I've been working on a field out in Luling recently, and TCEQ has been flying a plane over this area, and everybody knows when you drive through Luling, it smells terrible. And that's because so much of the casing gas, just traditionally for the last 100 years, has been vented. It's not enough to capture. They've been flying a plane over all these wells with a thermal imaging camera, and tracking down which wells are the highest emitters of methane and whatnot. And so there's definitely some change in the industry. With that said, I don't know that you're absolutely going to have to change to survive, but it takes away some of your prospects for sure. Some of the places you can operate.
Yeah, and the other thing is, you think about putting investment in. You mentioned kind of repurposing gas. Do you think that we are, for what you're hearing at least, people are investing in R&D? They're looking to develop new technologies, new products, or is that kind of one of those lost leaders that last year when everybody was losing their hat, they said, you know what, we can't afford to figure out how to be more efficient or how to reduce costs.
Yeah, so I can't speak for a lot of the large companies. Now, I've always said, and probably on this podcast a couple of times, that the companies like Halliburton and Baker Hughes, Schlumberger, they don't really innovate. They buy innovation. And with that being said, our service company has really leaned into some new products, and trying to make things more efficient and hit markets that aren't really being hit. And so, I think the smaller companies have doubled down and said, there's room for us to make our mark. The bigger companies are just kind of trying to survive still, and with that, I think they'll buy up some of that innovation going forward. And so, I think that's been the trend for a long time, and I don't see that changing much. That we really, as a smaller company, we don't have the red tape, and so we can go ahead and we can make those changes. We can adapt on the fly. We can build new ideas, get them tested, get them proven, and then get them to market.
So, was it 2 weeks? 2 weeks ago, Josh, we got accused of being a right wing show. When that was
Yeah.
episode? Okay, so we got accused of being a right wing show, so we want to bring on some more liberal guests. So, Reed, we appreciate you coming on for that. We'll wrap it up with these last things. We do have midterms coming up, and that is going to be a focus. Like when the calendar flips, today's the 1st of November. You have Thanksgiving, you have Christmas, and then primary season comes up. Do you think that's going to impact what we're going to see in the oil patch next year, the primary races? Will this make people a little bit more hesitant? Do you think people will be willing to risk dollars going into a primary season? Obviously, if the Democrats hold, you would suspect that more regulatory burden will be on the industry. But if the Republicans win, you see something loosen up. Do you think that people will put the dollars out there, not knowing what will happen November of next year?
Yeah, so a lot of uncertainty, absolutely. With that, and I'm not an analyst, but there's a lot of ways to look at it that, regulatory in the U.S., but also every time we have, more Democrats in our office, historically, we've always seen oil price go higher, right? And so what does that do internationally for the oil prices, and how does that play into what we see daily? And so there's so many factors that I think either way, you could see oil have some benefit, right? So the oil and gas space, higher prices, obviously, it's going to be more activity, but then a little less regulation makes it easier for us here domestically. And so, um, as far as the investment side, I don't know. That's out of my wheelhouse, Ryan. I'm good at spending the money. You're good at raising the money, and let's just keep it that way.
Well, okay. Democratic strategist Reed Goodman. Once again, it was good to have you on the podcast this week to balance out the Republican talking points that we always espouse. So it's good to have you on. No, Reed's not a Democratic strategist publicly. He doesn't tell people that. No, Reed, it's good to have you on. Also, Josh and I were wondering when are we going fishing again? Just curious when we might be going.
Shoots.
When we might
So
go.
it's perfect time. The stock tank at our house, we put 400 catfish in last year in September. So now they're perfect eating size. Y'all are welcome to bring the kids out. We'll knock out a bunch of catfish. Now, as far as going and catching some reds at the coast, oil might have to hit 100, 120 before we can really manage that one again.
I just want to know how we get for you to pay for me to go fishing again. That's really my concern. We need to put a little wager on this thing.
Yeah. Well, I'll have to think that up and get back to you.
All right.
Yeah.
No, it's good to talk to you, buddy. Yep. Think about a bet. We do need to get another trip on the books for next year. Where can people find you and what you guys got going on?
Yeah, so we've got a ton of stuff going on. We've got Tarpon Oil Tools. That's tarponoiltools.com. I've pretty much gotten off of all social media just to spend more time with my family. So, the website there, we do have Clarabelle Cattle Company. We're raising grass-fed, grass-finished, and grain-fed, grain-finished beef. That's clarabellecattlecompany.com. Both of those are also on Facebook. So y'all can reach out there to either of those. And so oil and cattle, two passions that I love.
All right, Reed. Well, it's good to talk to you again. And thanks for bringing the kids along. Spice it up a little bit. So Josh and I are so dry. We need a little levity on this podcast sometimes. So.
Yeah, absolutely.
All right, brother. Well, thanks for
a
coming on.
little youth. You guys are a little older,
We
I'm
are.
telling you.
Listen, I got gray in the goatee, so it's
Well, y'all been doing this 5 years now. When you started out, you were nice and spry, and now it's a whole new world when you get up there in age.
We're crusty old veterans. So it's it is a whole new world. Just to think of all the ups and downs since we started this podcast is crazy. So it's
It really has been.
It has been. All right, brother. Well, thanks for coming on again. And folks, be sure to check out Reed. He does mediocre work, I think is how we put it, right, Reed?
I'm not going to get into this right now. Y'all been trying to get me off for 2 or 3 minutes already. That's a long conversation about the kind of work I do.
The first time you ever came on this podcast, you railed on me, okay? I'm still bitter about that. Okay? So anytime you come on, shots are going to be fired. So, all right, brother.
I do excellent work when I'm working. Let's just put it that way.
That's a good caveat.
Yeah.
That's the key to win. All right, brother. Thanks, Reed.
Thanks, guys. Bye.
All right. Good to get Reed back on, Democratic strategist and progressive Reed Goodman.
All right, Ryan. So one little thing here. So this article that I was talking about, CNBC gas prices.
Hold on, real quick. But see, Reed's saying the same thing we're hearing. So if you're hearing something different, we'd love to hear from you guys. You know, to give names or anything, but shoot us a note and that's what you're hearing, because that's the vibe we're getting, and it's not a good. It's weird, right? The prices are good, things are up, but that's not the good vibe from the industry. So,
yeah. So this article talks about Biden's options for gas prices going up amid concerns of growing inflation. Now I know that the Biden administration is saying that inflation is going to be back to manageable levels by second quarter 2022. I guess that's just in terms of midterms, all right? They're saying that inflation is going to be manageable by that time. But there's a couple of things that was noted in this article that I thought was pretty interesting, because CNBC is typically not so tough on some of these issues. So one of the things they quote Murrell, Liz Murrell, who's the state solicitor general for Louisiana. And the quote was, "I don't think that the administration can create a problem and then declare an emergency arising from the problem it created. That's not an emergency. That's a problem you created yourself." And that's about the drilling ban that they gave to Louisiana. And Louisiana was actually trying to file a suit against them for that. So interesting things going on right now, as a lot of these states are a little frustrated with the administration and the fact that we found ourselves in this position now. So I don't know if that's politics. I don't know how much of it is actually legitimate as well. So it's hard to tell, reading between the lines.
All right, and hope everyone had a wonderful not Thanksgiving. Good night. Halloween this weekend and got plenty of candy. Josh, you're somehow getting off again. You're off next week, which is, it's good to see you back in your old form. You've been here a lot, made a lot of shows recently. It's good to see you're back to where you used to be with just taking off on regular vacation. So, it's kind of like Reed, when you work, you do good work. So that's good to know that you're you and him are two peas in a pod. Listeners, thank you as always. We have Jay Young will be co-hosting next week. Jay Young, I'm sure he will be fired up about oil prices. And with that, until next time, keep climbing.